Hello, my name is Kanwal Sarai, and welcome to the Simply Investing webinar. I'm very excited today. We've got people from all over the world listening in, at least over 7 different countries that I can see right now on the list here. So I'm very excited to be offering this webinar today. So let's get started. What's in it for you? In today's webinar, you're going to learn some of the fundamentals to successful investing. The goal is to show you how to maximize your profits, make more money, and at the same time minimize your risk. The focus is going to be on creating a new stream of income, of passive income, and we're going to see very shortly how you can set that up and get going. Specifically today, we're going to be covering 4 rules to successful investing, and again, these are designed to help you earn more, save time, and reduce your risk. Here's the agenda for today's webinar. We'll start with a little quick introduction about myself, get into some of the investing myths. We'll look at the basics first, and then we'll get right into the 4 rules, and then chat a little bit about mutual funds, and we will have some time at the end to get to some of your questions. About me, Kanwal Sarai. Now there's a couple of places where you can get some more information about myself. One is going to be on the Simply Investing website. If you go to simplyinvesting.com, click on the About right at the top from the main navigation bar, and you'll get some information about me. The other option is also you could watch Module 1. This is the complete Module 1 of the Simply Investing course, and that again is available on my website. And the last URL is a little bit long here, but we'll leave it up on the screen for a few seconds. This is a blog entry I did recently, and it's a little bit about myself and how I got started investing on my own, so you'll find that very interesting. So today I don't want to repeat any of this information. A lot of this information about my background and how I got started is available on our website. We want to get into this webinar and get going quickly, so I've got one slide here, and this should take about 60 seconds or less. A little bit about me. So I first started investing in 1988, beginning with a term deposit, or a GIC. I then moved on to mutual funds, ETFs, and then stocks. I had mutual funds for about 10 years, working with different financial advisors and financial planners. I realized over the course of 10 years the mutual funds would go up and down in value. Towards the end of the 10 years I had nothing to show for it. The value had dropped. I came to realize that financial planners, advisors, at the end of the day were mutual fund salespeople. And sometimes their interests don't align with my interests as an investor. In any case, then I got involved in 1998 and 99 in the high-tech bubble, where all these high-tech stocks were going up through the roof. Stock prices were increasing almost daily. You could literally buy a stock for $25, $30 on a Monday and sell it on a Friday for $40, $50. So I got involved in buying stocks without any knowledge of what I was doing, just going after advice from family and friends and what I read on the internet, and that didn't go so well either. I wasn't making money with stocks, I wasn't making any money with mutual funds. So I realized that I had to do something different. I had to educate myself first and get some knowledge and learn on how to invest properly. So I had to find some role models, people who didn't win the lottery or inherit any money or had rich parents, but who became successful on their own, and who were successful consistently over the long term, year after year after year. So basically find out who they were and just copy what they did. So I read a number of books, did lots of research, and the same concepts kept coming back over and over again, which was essentially you have to invest by yourself, for yourself. No one cares more about your money than you do, and it is very simple and easy to invest on your own. And that's what I started doing, and you can see the track record on our website, which covers the last 10 years, is available, and I was very successful at it, and I continue to be successful. So this webinar today and the complete Simply Investing course is accumulation of, I spent 3 years researching this through trial and error, interviewing other investors. So the webinar and the course everything that I've done all packaged into one to make it very easy for you to get started and become a successful investor. Okay, let's start with some of the investing myths. There's three big ones that most people think of. The first thing they think of when you tell them that you are going to be investing on your own, or you tell them you're going to be investing in the stock market or buying stocks. So what are some of the negative connotations around that? What are the things that people think of? First one is people are going to say, well, it's risky. It's like gambling. And people use terms like, oh, well, you're going to invest in the market, you're just playing with your money, or you're taking a chance. And you'll see shortly as we get into this, into the webinar, that it doesn't have to be risky at all. The next thing is people think it's time consuming, that you're going to have to spend hours and hours of research on learning how to invest, and hours of research on which stocks to buy, and then tracking them every day, and that is not the case. My students are very busy. People who have taken the Simply Investing course, they have kids, they have full-time jobs, and they can do this. Essentially, the way we go about it in the complete Simply Investing course is we describe what I call a plan A and a plan B. Plan A does take time, and it is better suited for individuals, people who do want to spend the time and do the research and do it on their own. And that takes about approximately, an hour, 30 minutes, maybe an hour and a half, a month, or whenever you're ready to buy stocks, when you have money to invest. So plan B is a lot quicker. It's about 10-15 minutes a month, or only when you're ready to buy stocks, when you have money to invest. That's when you would use plan B. It is quicker. Both plan A and plan B will give you the same results, and in the Simply Investing course we go through both options in detail. And one of the last things I have here on the list in terms of the investing myths is people think it's too complicated. They think it's like rocket science, and that's not true. You don't need a master's degree in finance or economics or accounting in order to be a successful investor. Now, the financial industry wants you to think that it's complicated so they can take your money and invest it on your behalf, but it doesn't have to be complicated. So investing is risky, complicated, and time-consuming if you don't know what you're doing. And that's the bottom line here, is education. And that's the difference between someone who's investing responsibly and someone who's just speculating and buying stocks and hoping just on sheer luck that they're going to be good at it and make lots of money. Next, let's take a look at some of the basics. Some of you may already be familiar with some of the topics in this section, but I do want to make sure that we're all on the same page. What is a stock? A stock is basically an ownership in a company. For example, Microsoft has a little over 8.7 billion shares outstanding. So if you wanted to buy half of the company, you would have to buy a little over 4.3 billion shares. If you bought all 8.7 billion shares, you would own the company. So most cases, people are not going to be buying that many shares. So if you were to buy 10 shares or even 100 shares, you would have ownership of the company, albeit a very small piece of the company. So when I talk about stocks or shares, in our context, it means exactly the same thing. It is an ownership, part ownership of a company. This is what a share looks like. An example for Starbucks Corporation. These days, you don't have any shares, physical shares they can hold on to. It's all electronic, so when you do buy and sell shares, it's all done electronically. So this is kind of rare to be able to see what a stock certificate looks like. A lot of times when people talk about investing in shares or stocks, they think of it as a piece of paper. So this is what you see on your screen is a piece of paper. It is a share of one share in this company. But I want you to stop thinking about investing in a piece of paper. It is an ownership of a company. So it's sort of a mental shift in thinking. When we talk about investing, we talk about taking part ownership of a company. So as an investor, that's what you're doing, is buying a little piece of the company. Now as part owner of the company, you're entitled to two things. One, you'll be invited to the shareholders meeting every year, which most people, in the last 12 years, I've never gone to an annual shareholders meeting. Most people don't need to go or attend unless you've got millions and millions of dollars worth of shares. The second thing you're entitled to is to share in the profits, because you're part owner of the company. You're entitled to profits. Which brings us to the next question. What is a dividend? A dividend is basically a cash payment that is made out to you as a shareholder. It's essentially you're sharing the profits of the company. So in this example, let's say we've got a company that is giving out $1 dividend per share, and you happen to own 100 shares. This means that you will get $100 in cash every year as long as you own those shares and as long as the company continues to pay out $1 a dividend per share. We're going to get a little bit more into dividends further in the webinar, but this is extremely powerful. It doesn't seem like a lot of money right now, $1 per share, but just hang in there. In a few minutes we're going to be taking a look at how powerful dividends can be. And the last question is, what is the stock market? And this is what most people think of when they hear the word stock market. This is an actual photograph of the New York Stock Exchange, and you see people, whenever you see it on TV, there's people running around with pieces of paper in their hands and shouting orders back and forth. Basically, a stock market is a place to buy and sell shares. Now, because of the internet, we can do it from the comfort of our own home, and we don't have to go out to the stock market to buy and sell shares. We can do it online. The two major ones that we talk about is the New York Stock Exchange. That is the largest stock market in the world, and also in Canada we have the Toronto Stock Exchange. So Canadian companies, for example, like Petro-Canada or Loblaws or Canadian Tire, trade on the Toronto Stock Exchange, and then the American companies, for example, like Walmart, Starbucks, McDonald's, trade on the New York Stock Exchange. So how do you become a successful investor? What's the big secret? And it's basically no secret at all as soon as I show you what it is. But this is the essence of everything that we teach at the Simply Investing course, and the essence of what we're going to be teaching today in the webinar. How do you become a successful investor? You become a successful investor by buying quality stocks when they are undervalued. The two key things here are quality stocks and undervalued. Let's take a look at undervalued first. So on your screen you can see a graph of a stock price. When the stock is priced at $14 a share, it's undervalued. When it's at $51 a share, it's overvalued. Stock prices go up and down for many, many reasons, and they fluctuate. They're volatile. You can always see them. They go up and down at any point. The key here is you want to be able to buy, in this example, the shares in this company when they're at $14, or maybe even $15, or maybe $13 a share. That would be a good price because they're going to be undervalued. Why do you want to buy stocks when they're undervalued? Because that is going to maximize your profits. You buy it at 14 and you can sell it at 51. There's no point in buying it at $51 or at $49 or $52 because there's not much room to make any profit. I mean, it would take years or decades for the price to go higher. So you want to buy low and sell high because that's when you're going to maximize your profits. How do you know when a stock is a quality stock and when it's undervalued? To help you determine that, I've created what I call the 12 rules of Simply Investing. Now in the complete Simply Investing course, the full course, we go through the 12 rules in detail, and we provide you with a step-by-step checklist to help you determine when a stock is a quality stock and when it's undervalued, so you know exactly when to buy. Today we're going to be covering 4 rules out of the 12. These rules lay the groundwork and provide you with a solid foundation to begin investing successfully. So there's no shortcuts here. We're going to go through the 4 rules exactly as we cover them in the complete Simply Investing course.